Wednesday, October 25th, market analysis. Stan Ehrlich, good morning. I'm a little late, 10:07 California time, usually between 9:45 and 10 o'clock, the middle of the trading day. And I always start out with the stock market indexes, typically the S&P, the SPDR, or the E-mini. In this case, the E-mini December futures contract is about to make a new low for the whole move down since that top we had in July 27th, which was a bearish engulfing ER sell signal on top of the market. And I said so the day it happened. And this is what we're getting. Now, we're still in October. Remember, there is a 90% historical profitable. It happened 90% of the time in the last 30 years. Bottom in October of some significance. What does the word some mean? Well, obviously a rally to make things worthwhile, and maybe like last October, an incredible bottom to the exact day of the whole bear market and the beginning of this bull market. These signals, these green and red lines, are occasionally whopping very long-term investor style top and bottom that the system picks to the exact day. Okay, our trailing stop took a nice profit out of this buy signal on October 6th. The bottom had been October 4th for the month until Monday of this week when we made a lower low but got oversold again. When you're oversold, there's a strong likelihood that within a short period of time, it may be a few days, the market is going to turn back up again pretty significantly most of the time. Over here, we got oversold. We rallied for a few days, came down, and then double bottomed out almost, and had a bigger rally. I'll get rid of that little bearish engulfing indication. So these oversold and overbought conditions are to be paid attention to. And that is to heighten your awareness of market turns. No matter how you calculate them or discover them, quote unquote, discover them, they're going to happen frequently when the market is overbought or oversold. All right. And I speak from over half a century of doing this. This is the possibility of a low. I'm not saying it is, but this is exactly what I've seen many times. You have oversold condition that pops up a little bit for a day, comes back down around the low of the previous oversold day, which could be the previous day or 1 or 2 or 3 days earlier, but very recent. And all of a sudden, kaboom, it turns right around and heads up substantially. In my case, not only am I looking for a turn because of oversold conditions, but I'm also looking for a turn because this month of October, again, in the last 30 years, has turned up in October 27 times out of 30. And some of them have been incredibly profound, like last year. So let's see what happens here. This is the Christmas, December E-mini. Next chart, we're coming very close to the lows in the SPDR as well, as you would expect. They're the same index, different, little bit different perspective, but we have not yet made a lower low. It could turn out to be a minor small, 3-day double bottom, but that remains to be seen. We are testing support, so this would be an idealistic spot for it to try to rally. But again, these comments are a little premature. Next chart. We've got the 1-minute data on the SPDR just to show you how it's been sinking all day long. Opened lower, hit a low, bounced a little, came down, hit another new low, bounced a little, and it's now made new lows only 6, 7, 8 minutes ago. So not really any indication it's turning back up. Next, QQQs are also right back down to the low on Monday, which was and is so far the lowest low for October. It is at a support line that I drew a long time ago, that green dash line, and it is back down to what used to be the neckline of a head and shoulder top that we abandoned because we never had a breakout. And there was much too much of a rally. It got up too high on October 12th. And so what we've got at this point is a downward slanting wedge or pennant, downward slanting pennant, same thing. And we're at the bottom of it. That's exactly where it bottomed out 2 days ago on Monday. So why not again? That's what it's supposed to do. If it breaks below this line, it could turn bearish quite sharply and quite quickly. And this is October, so it could get oversold substantially. And I've got 1 day less than a week, including today. Tuesday of next week is the last trading day in the month of October. Next chart. NASDAQ. Same thing, of course. This is the Christmas NQ, NASDAQ futures. So they're going to do the same thing around the same time. Next, period. The DIA actually made its lowest low October 6th with a bullish engulfing ER buy signal that has not been violated. So what we've got is exactly what I thought we had back then, but only existing in the DIA at this point. I also have to point out something else. Now, this is very unusual. We were oversold on Monday. If within a few days I get a bullish engulfing, I will have a green ER buy signal. Today's low is only a couple of ticks lower than yesterday's low, but that is lower than yesterday's low. Today's high is exactly the same. I believe it's the same tick. High today, 332.69, and yesterday the high was 70, 1 tick higher. So if we make, by the close of business today, a new high by 2 ticks, it'll turn green. I'll have a buy signal almost on the second low I will announce, so to speak, and the first low, which is the beginning of October. So we'll end up with a double bottom. But again, that hasn't happened yet. I'm just pointing out that we came super close. And a very big, strong rally at the end of the day, by the end of the day, or at the end of the day, would make it work. Again, I need 2 ticks new high or more. Next chart. The Russell 2000 has broken the lows again and again on the way down. Its head and shoulder top never failed. It has now exceeded minimum downside objectives, and that pattern worked past tense. Now we are almost oversold again. It was on Monday, and we have a new low for the move down. So we're extremely close to being oversold again. And we're almost at the bottom of this support area, which is the lowest low for over a year and a half. In fact, if we make it down below that red line, and we're very close to it, the Russell 2000 will be making new lows ever since, November 5th of 2020. 3-year worth of new lows. That's about right, which is still a huge support area. So watch closely to see if the Russell turns around and starts to move up. Okay, let's go to October low chart real quick. About 3 months ago, I drew this in. That was my downside exact objective and point in time, price and time. 407.50, I'm going to get a little more accurate. I had been saying 406 to 407. If I get super close, great. We are about to make, maybe we're going to make a new low again. I can't tell, but I can say it would not surprise me if today's low is going to be very profound. I simply need to get above yesterday's high on a closing basis, and then I'll start screaming bloody murder. And if it happens today, I'm going to get a bright green buy signal. All right, futures. The E-mini from a different perspective, extremely close in a support area, almost oversold again. It's getting ready. The best I can say is I'm expecting to see a beginning of a big rally very soon. Next chart is the NASDAQ. Same comment at the bottom of the formation, almost oversold. It was 2 days ago. This is extremely low risk. If you're wrong, you're going to risk very little. lose very little. Place to be a buyer. You just don't have the bullish evidence that you and I would love to see. It might happen in an hour, and then you won't be at this price anymore. Next, bonds. Drop down low enough today to go long on the ER3 new long buy signal that was generated because of Monday's green bullish engulfing buy signal. That's exactly what I want to see in the stock market indexes very soon, something like that. Yesterday, we were unable on ER3, and today we came down to our little green dot and we're long. Small loss at the moment. Protective stop is the yellow dots. They will start moving now that we're in the position. I guarantee that. We may not see it on this chart. ER Signals is available, and we don't have the website finished quite yet. ersignals.com, coming soon. Next chart, 10-year notes. Exactly the same commentary. Not quite the lowest low, but green bullish on Monday signal. Unable yesterday. Today we're filled, have a small loss at the moment. Always, always, always our protective stop is entered automatically, and the strategy is 100% automated. So we just sit back and watch and wait. I'd love to see this close with a profit. That would be above 106. And the higher, the better, the quicker. Next, crude. Drop down to the bottom of the red zone, the bottom of the support area, and held this morning. Turned around and is now significantly higher for the day. We didn't get oversold. We don't have to in order to have a turn, but it just adds a lot more likelihood that if you are looking at a turn in the market, it's going to be more significant, more valid, more profound, and therefore more of a move. So I haven't got that. I just got support and a modest reversal so far. But that's good enough for me to say that we're going to rally some. Next, natural gas. We're still short from almost the top of the market back on October 11th with the bearish engulfing ER sell signal. Worked great. We sold it short on ER3 at 3.7 and change. Profit on the first day. More profit second day. More, and 7 days later, we finally hit the most profit so far. 8 days later, Monday, we have oversold conditions for the first time, and sure enough, closed higher that day. And we've rallied yesterday a little and today a little bit more. So we'll see if it turns down soon. Otherwise, we will be taking a very nice profit on this trade probably very soon. But let's see what happens here. Next, we've got heating oil. There may be a complex head and shoulder top developing. I've got two obvious rally highs here, one on August 10 and one on August 25, and then the top. Unfortunately, no red ER sell signals involved. That drops down slowly and then faster until we get oversold on October 6th. That number comes up a lot, or date comes up a lot, doesn't it? Then everything turned up and made the first shoulder. Now there's two of them on the left. There should be, because head and shoulder patterns are very symmetrical historically, two shoulders on the right. We have made one a week and a half ago already. That means to me that we could come down closer to the red line, which is pretty horizontal, almost flat. It's the neckline, if I'm right about this. Then rally another several days, a week or so, and that'll be into early November, probably. And then if it doesn't make a new high above 3.16 or so, and it comes up only to, let's just say 3.05, I'm guessing, and it starts to turn around and go back down again, I'm going to scream bloody murder, double shoulder, head and shoulder top. Watch out. We're going to go down to approximately, hell yes, the support levels that we saw again and again and again work. I'm going to say 214 at the moment. I didn't take the measurement, but I wouldn't be surprised if it's a little closer to 2. Next chart, gold. We're missing some data here yesterday, and I have to correct that. So this is probably a little bit of a rally today, or about unchanged. We already took profits, and a heck of a great profit. In the gold market, we got a buy signal on the bottom. We had a sell signal on the high. Here we had a buy signal on the bottom. And here we had a buy signal on the bottom. Some of them worked very, very nicely or very modestly, and this one has worked spectacularly. But we're out on Monday and waiting for something new. Since we're very overbought and relatively close to resistance area, I'm looking for a turn down. I'm looking for a bearish engulfing red sell signal, hopefully something like the one on July 20th of this year, next chart. This is that gold chart, and it is simply a 10-minute version of it. And it is the trade that you just saw on the daily data chart, except in 10-minute chunks. This is how our STS smart trailing stop moved relative to the inputs that we were using. And that's where we bought it, and that's where we got stopped out. Not bad. Next chart. Silver. Unfortunately, no buy signal on the bottom, but oversold at support. And this is not a legitimate sell signal because of my bad data. Something's gone awry with the silver and gold data this morning, so I have to get that fixed. I apologize. This is just simply a little bit of a down day on silver. No, this should go away tomorrow or this afternoon. Now, this was a legitimate buy signal in the platinum at the bottom, and on the top of the market, a legitimate sell signal, and a great bullish trade in the process. We got a buy signal on the bottom. We got another buy signal on this bottom, October 6th, and we are still long from October 6th. Next, high grade. Rallied up to the top of the resistance zone and flip-flopped after a new high for a week and a half, right back down again. We almost have a bearish engulfing, but I'm not going to get a red ER sell signal like we did on this top to the exact date, or a buy signal like we did on this bottom on the exact date, or this bottom on the exact date. That's because the RSI wasn't extreme enough. But a bearish engulfing would do fine for me. I'm basically bearish. We have lower highs and lower lows ever since the beginning of the year. 10 months worth. Bear trend. Next. Soybeans. Currently, we have an outside down day, bearish engulfing, but again, the RSI conditions aren't there for a new sell signal. We are out now of our long position with a reasonably okay profit. I'm a little disappointed it didn't capture something bigger. I probably should have tightened up the stop. It is adjustable over time in order to lock in a better profit. But when you do that, you're kind of breaking the rules by not using the default settings, and you don't know what to do next. You're throwing question marks into the strategy. You might make more money on 1 or 2 or 3 trades and so on, and you might get a candle on how to manipulate the strategy over time, which probably would happen. But I don't recommend that at first. Next, what a whopper of a short position in soybean oil. We have been riding now this short position down from the top. The high day on a double top formation, which was the second high on a head and shoulder. The head formation is a double top in itself, which is not all that unusual. It's fairly rare, but the pattern has given us no problem at all. Even though we got a buy signal on a low that lasted 2 or 3 days, all it did was rally it back up close to the neckline, and we turned back down. We made new lows, and yesterday we made a new low again after Monday's lower low and got oversold. So this rally today, totally normal, expected. I just expect it not to go too far. I don't want to get my stop hit. And of course, get down to the minimum downside objective, which has been on this screen for weeks. And that would be 50. And we had a low yesterday of, what was the price? 50.82. And current tick is 52.27. So there's a little ways to go, but we got oversold a little too quickly. So let's see what happens. I hope I hit 50 or lower. And then I would not feel bad whatsoever about getting out of my trade because I took the whole bear market move out of it. Next chart. Big possible head and shoulder top in meal I've been talking about for a while, but we just have rallied too much, too far, too long, and we're still overbought today, but there's a chance that this is a high day. Why? Because we have a new high and then we're trading lower on the day, most of the day. If you can get below yesterday's low, which does not look likely, that's a pretty sharp break. Then we'll have a sell signal that's official, green, I meant red, bearish engulfing ER sell signal, but that hasn't happened. I'm going to erase these arch marks for the shoulder markers and the head markers because I do not believe anymore that this is a head and shoulder pattern. This is a legitimate trend line, which is the old neckline. I don't think I should be erasing that. I'm just going to leave it alone here. Just give it a little polish. And that was tested recently, oversold at the same time, and look at the rally we got out of it. So I'm looking for it to turn down again, and today could be a new shorting sell signal day. Not my kind of signal, but overbought and a lower close after a higher high. Next chart is corn. As I said before, I thought corn was going to go the way of wheat. Now all of a sudden in 3 days, we're breaking quickly to the lows, close to the lows of the trend. For quite a while, we've had lower highs and lower lows. I think this corn market could have a long way down to go, to be honest with you. I'm going to give you a quick guesstimate, an educated guesstimate, that we have a longer term, months from now, downside objective is something in the ballpark of 340. Next, wheat already really has been doing this all along. We had an oversold condition with new lows September 29th, a month ago, 3 weeks ago. And now a rally high has apparently ended and we're on our way down to new lows again, as I've talked about almost every day. Next, live cattle. Oversold, bouncing a little, no surprise. Told you this was likely. I think we're going to come back up to approximately 82. Yep, high 81s. Hit the little red zone here and go back down. I might get a sell signal when we rally up there, but I kind of doubt that. Oh yeah, and I can't rule out the gap closure, which is right around 84.30. Next, we have hogs, a brand new today buy signal in hogs. This is how they look the day they happen. We are long from a tick above yesterday's high. We have a bid in now starting tomorrow for a few days at 669.97. And we'll try to get the EI3 filled at again 6697. Now that 6697 could change if it will change if we make new highs by the end of the day. The signal itself won't change. It's still an outside up day in oversold conditions within a certain period of time. On my custom relative strength index, this is not Wells Wilder's traditional 30-70 overbought, oversold level scenario, 14-day, 14 bar look back. Mine is significantly different for a variety of reasons. I can immediately think of 3. Next, I don't know what to say about orange juice. It's a long-term bull market, and I got something to say. Yes, I do have something to say, and it is profound. This is a blow-off top. This looks like it could scream higher. It already has. Can it go more? That's very, very difficult to talk about or forecast, pinpoint, whatever, under blow-off top conditions or collapsing blow-off bottom bear market conditions. Either one of them. You have to typically go off historical levels or maybe fib retracements or projection numbers. There's a variety of tools to use to forecast tops in markets that have never been there before, price-wise. I think we're relatively close, but I have not scream bloody murder. A few days ago, I was wrong. It was a small loss. I'm out flat. Took 2 days to stop me out. I'm now waiting for another signal. It'll be a red bearish engulfing ER sell signal. Let's see what happens. Next chart. This looks like a double top. I'm going to erase this arch mark because that's not a head and shoulder top anymore. And I was expecting a high around the time period that we had one 2 days ago, but nowhere near as high a price. So now it's turned itself into a long-term loss of momentum. I hate to say this, but moving average. A longer-term moving average would be flattening out, depending upon the time frame. Let's call it 20, 50, 75 days maybe. Steadily up, obviously, during this time period. But now that it's gone sort of sideways with a very slight upward slant to it since August, you're probably flattening out on that moving average and not going up anywhere near as fast as it used to. I don't use moving averages. They're late by design. They're a crutch, so to speak. No offense to anybody that loves moving averages. You learned how to use them. I never did. Didn't like them. I know how to use them. I didn't like them. So we do have a higher high today from yesterday, and it is yellow. That means overbought. So all we have to do is dip below yesterday's low, and I got a big signal, but it has not happened yet. If it does happen, I'll scream bloody murder, and we get a sell signal, and we'll see what happens from there. Next chart is coffee. We do have a bearish engulfing ER official sell signal in coffee. We are already short ER1 from 165.00, let's call it. Easy number to remember. And we're at 161.75 at the moment. So the ER1, which is the signal I get and the trades that I get, the day it turns red or the day it turns green, get in when that day is active before the close. So I'm short ER1. Both the scalp trade, which looks like it's going to be very profitable because I will be out by the close, or a position trade I will hold until the trend changes or I get stopped out. Then it will be when I get stopped out. And that will be, when the trend changes. Next chart, sugar to sweet. How about that? We have a new high for the whole shebang, a whole long-term bull trend, just going up and up. So you can't help yourself. You've got higher lows and higher highs over time. Sugar is still in a long-term bull market. I do have an outside trading range, but it is up. Now, I normally would say this could be some sort of special reversal, but it has to be overbought at the same time to bring that topic up, and I won't because we're not overbought. This looks like it could explode upwards if it can close in particular above 27.90, but we're not there. So what do? We punched in a new high ground for the whole trend. There had to have been a bunch of buy stops up there, but it didn't stay up there. This is a blow-off top, minor, very minor. Bull trap, it's called. New highs over time usually is bullish, but it has to stay there. This is not at the moment. And if it closes where it is or lower, we're just going to pile on more sell signals of various types. It won't be an ER sell signal, but various types by the close. So watch out for this one. Sugar could be slipping back down. I don't know, maybe to 25, 26 again. Next, oversold on Friday of last week, Monday this week, and now is finally showing its strength, getting out of oversold, rallying a little, but it's very minor. Cotton's just not been very big mover, very active for a long time. Didn't get down quite as low as I think it still could, and that would be 76-ish. Next chart is back to the E-mini, which may have been making new lows while I was speaking here. Let's quick check. I'm almost finished. Indexes. That's the E-mini 1-minute chart. I will swing over to the, let's see here, Qs, GAA. Okay, we have a low on the E-mini Christmas futures contract on Monday of 42.13 and a quarter. Today's low is 42.13 and a quarter. To the exact tick, we've got the same lows on Monday and today so far. Very unusual. I think so unusual, they're going to get broken. And we'll make another new low. Excuse my cough. Thank you. Talk to you tomorrow. Have a great trading day.